Hello there again, fairbinaryoptions.com here, and this is the second part in our guide how to trade binary options with a currency pair or based on the currency pair. And we said that the first decision that a trader should take is to take into consideration what financial product from the ones that the binary option broker is offering, what financial product to trade. If the choosing one is the currency pair, then it should be known that the currency pairs are being categorized in two major categories: major pairs and crosses. Majors have the US dollar in their components. Crosses do not have the US dollar in their components. The next thing to do is to look at the type of option that one wants to trade. For example, if you trade a high-low option, or if you want to trade a let's say one-touch option or boundary. Why this is important? Because both of them, or each and every one of them, should be applied on the currency pair that is about to move, or on the currency pair that is about to range. The next thing to do is to go and look at the economic calendar. And you look at the economic calendar. Let's go at this date, for example, for this week or for next week, for this week in here. And let's assume that over the weekend, on Sunday or on Friday, you are making a trading plan, and then you look at what are the releases in the week in front of you, and you see that you have the CPI in UK. Now the CPI, or inflation, is extremely important and brings a lot of volatility. So maybe you would like to avoid this kind of over release. So avoiding the Great Britain pound at least until Tuesday. You will see that you will have the CPI on Tuesday in the United States as well, and on Wednesday we have the FOMC meeting minutes. So a lot of volatility should come for the US dollar pairs this week because of both the FOMC minutes and the CPI inflation. In other words, you go back on what we've discussed in here, and majors should be avoided. Now, if majors should be avoided, then we would like to trade crosses. But there is a difference between how majors and crosses are traveling, because crosses are traveling less than the majors. Namely, they are consolidating most of the time. If they are consolidating most of the times, then we should look to trade one touch or boundary with an oscillator maybe and so on, in order to find out overbought or oversold levels and trying to avoid the majors. If still majors should be traded in such an environment, then the advice is to choose bigger expiration date when compared with the time frame that the analysis, if it is a technical analysis, when compared with the time frame that the analysis is being made. All in all, trading a currency pair should take into account both the type of the option, the expiration date, and the fundamental analysis. It is not possible to look at markets without fundamental analysis, as markets are moving. They need a reason for a move, and that reason comes from the fundamental analysis. So technical analysis may drive the decision, but fundamental should be the reason for this kind or that kind of overmove. When it comes to currency pairs, everything is related with interest rate decisions, and the advantage of trading binary options like one touch or boundary is that it allows you to find ranges. Ranges are most likely to come in crosses and not in majors. Just one more thing to add is coming from the trading sessions one should consider. Most of the times in the Asian session you will have ranges. So if you go here, this is Euro US dollar. If you look at the previous Asian session, basically it was from here to here. Ranges on the hourly chart. So going on the 5-minute chart, trading small one touch or boundary options, or if the overall picture is bullish or bearish, then you can trade an option based on that picture, but with a bigger expiration date. Thank you very much for being here on our Binary Options Academy on fairbinaryoptions.com. Hope you enjoyed this one, and hope that it clears a bit the confusion related to what currency pair to trade. Thank you and bye-bye.